All right, everybody, ladies and gentlemen, hello and welcome to Nadex. My name is Philip, and I will be once again your presenter for today's webinar. Today, it's all about trading the global markets through binary options. It's our market commentary sessions, but it will with a little bit more spin and emphasis on picking binaries to implement those strategies and the analysis that we see on those markets. If you see, now you do see that small questions box on your PC, and perfect. Jason, thank you very much. You're the first one, so great to hear that both the audio and the screencast are working properly. And let me just switch the slides here so that you guys can actually see that something is changing. Perfect. And yeah, guys, just as always, if you do have any questions, please let me know using that small questions box, and I'll do my very best to answer your questions as we move through the webinar. Today's session is scheduled to run for around about half an hour, and of course, before we get started, you already see those first risk disclaimers and warnings that I need to make you aware of, so please take a moment of your time to read through those carefully and make sure that you are comfortable with them. Essentially, this says that trading involves risk, and you should understand those risks and the instruments you're using before you're getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live part of today's webinar. We will be looking at the markets together, but just because I see that something, or I feel that something is going on in those markets, obviously I don't have a crystal ball. It's really just my analysis, it's my opinion. You should never just jump in because some random guy on the internet told you that he likes a certain market or not. You must own your trades. It's your money that you're putting on the line. You must understand why you took that trade. You must understand the position sizing and the risk mechanisms, and all this coming together, you must own your trade. So please make sure that everything that we do say and show you guys here during those webinars is always just for educational purpose. That being said, let's have a look at the risk warning from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including forex, stock index futures, commodity futures, cryptocurrencies, and economic events. Trading can be volatile, and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's just jump in it and see what's going on. And by now you will have probably noted and realized that I do have a slight cold. I do my very best to mute myself just in case that coughing and sneezing is creeping up. Already apologies for any inconveniences that this might bring to you guys. All right, so what is today's agenda? The many advantages of trading binary options, spread pricing and selecting the right contract, practical binary trading scenarios, and of course the major part of today, understanding what we want to look for when we analyze those markets. Because first I want to see something, I want to identify a trading opportunity, and then it's just a question of how I want to implement that trade setup, how I want to implement my strategy, what are the instruments that I want to use. And this is where both spreads and binaries will be coming in. So what are actually the advantages of trading binary options? With all those markets accessible here from your Nadex account, you can also say, why not just trade the underlying market? Why not just trade the futures? Why not just trade forex? The nice thing is, at first, you can trade all those markets from one single account here at Nadex. Many different markets, many different underlyings, that they're all available here. But apart from that, both spreads, which will be covered another time, and binary options definitely bring something to the table, which make them rather unique investment opportunities, trading instruments. And the very beautiful thing about those contracts always is limited risk. You know upfront exactly how much risk you're putting on when you open your position. With pretty much almost any other trading instrument, there's always even if you apply proper risk management, a certain set of uncertainty involved. You always have that risk that even if you have your stop loss orders in place for your futures market, the market might still gap overnight. The market might still move so fast that you will have slippage with the trade execution. So even if you applied absolutely brilliant, perfect risk management, bad things still can happen. Here with those Nadex contracts, you know those bad things definitely upfront. No, no nasty surprises, no nothing. You know your risk when you put that position on. I feel that this is one of the major advantages when it comes to trading those markets. Easy, proper risk management that is really the amount of risk that you take on is the amount of risk you have. This is not for certain when it comes to other trading instruments. Binaries are at their core a very simple instrument. In the end, you always have to ask yourself just a simple yes/no question. The question is always, do I think that the underlying market will be trading at expiry above the strike price of my binary contract or below or at the strike price? So will it trade above the strike price? Then it's a yes, and this contract will settle for $100. And if I think it's a no, then this contract should settle for $0. Two outcomes, therefore the term binary. And definitely binary options offer an intuitive way to trade the financial markets with relatively low collateral. If you want to trade the stock markets, you better have deep pockets, especially if you want to do it intraday. Obviously, it's based on where you're located, what is your jurisdiction, and what rules are there. If you want to trade, for example, the US stock market, you're very soon approaching something which is called the pattern day trading rule. And this results in you having to have at least, I think it's 25,000 US dollars in your account to be able to really trade more often and trade in a frequency that you do like. With futures, it's definitely better, but with futures, you also have to put quite a lot of money in your account to essentially be able to put on those trades and apply proper risk management. Here, when it comes to trading Nadex contracts, that initial investment can be really, really small. So I feel that this is one of the easiest ways to get into the markets and still apply proper risk management. I'm very stern about that risk management. I feel this is really crucial for having long-term success. So the benefits is, once again, you trade with strictly limited risk. You have a low collateral required to actually trade, and as is with options, you have opportunities both in volatile and in flat markets alike. And you have different markets available here, different types of markets. You have commodities, you have financial indices, you have cryptocurrencies, you have forex, you have all those different markets, and they are accessible from one account here at Nadex. Not only those different markets, but you have different expiry cycles. This is from multiple daily trading opportunities up to weekly expiry schedules as well, if you're looking for longer term trading opportunities. So a very nice set of opportunities here and advantages why you should consider trading binaries. So let's have a look at the markets together and try to see if we can find something that catches our eye. And then once we see something, let's talk about how that could be implemented here using Nadex contracts. Now, just a moment. All right, guys, back again. And here we are with our markets. First market I want to look at is the S&P 500, the US 500, how it's called here at Nadex. Obviously, one of the biggest markets here in the world. And you can always think of the S&P 500 as the world index. Those companies listed here are so strong and so huge. And we will take care of those. How should I explain it? If I understand what the S&P 500 is doing, I have a fair understanding about what the global economy should be like, what the general state of fear and greed is across all those different markets. Jason, thank you very much for that market suggestion. Soybeans are not on our agenda today, but I'm more than happy to cover them another time. I have to speed it up a little bit just to stay in line here, but definitely thank you very much for the suggestion, guys. I'm sorry with my cold. All right. So what do we see here with the S&P 500? We see we have those levels. The market is moving somewhat sideways. We can see the market has been making now higher highs, but those higher highs came after the market made lower lows. We have lower lows being followed by higher highs. This is not clearly any kind of trending environment. Now the market has pulled back a little bit, but we failed to really make new higher highs. And now price is making lower lows again. So overall, this market here is pretty much in a sideways phase. It's not so clear what's going on, but I hope you can see how the market adheres and really pays attention to those levels that we have identified previously here in the past. The nice thing is with those levels, and those are always flat horizontal levels for our style of trading, because sloping trend lines can be really pretty ambiguous. We don't know, we know how to draw them precisely. It's a tough thing, however, to draw them precisely. And we also see that the market doesn't really always pay attention to those sloping trend lines. And we feel just from a probability perspective, horizontal flat lines of support and resistance definitely help us to improve the odds of having profitable, potentially profitable trades on our hands way more than sloping trend lines. When I prepared for today's session, the market was just testing this level once again. However, since then, we've just broken through. The big picture here, however, is sideways market, not so much direction, not so much context here. I'm looking for a good and strong context, because this good and strong context is what sets the stage. If I know the market is under big pressure, I want to see this on my daily chart. I feel the daily chart is giving me that that bird's eye view on the market, where I want to see and understand what the market is giving me. And here with the S&P 500, currently I do see some pressure. I could see a potential comeback and retest of this old level here, and then I go for the lower level here at 2,615. However, it's a range-bound market. It's not really that strong at that point in time. Our strategies are always more trend-following strategies, which is why we are looking for trending environments. Let's just compare this S&P 500 with the levels with the Germany 30, which is of course the German stock index, the DAX. Let's just compare the chart structure that we get here. We see a very clear and smooth uptrend. We didn't have that uptrend before. What was the S&P doing? The S&P was moving sideways, not really going anywhere, pushing a little bit higher, testing this level and breaking back in the range again. The DAX is giving us a much clearer, much better chart structure here for potential trading opportunities. We have once again seen here also this level of round about 12,914 and 15 in the in the DAX. Now we see that the 10-period moving average has started to close down. We can see that the 20-period moving average has started also to pull back. The distance between those moving averages is closing down. All this is suggesting to me that together with the new lower low that we have now clearly made, we have now made a lower high and we have now made a lower low. So the trend has already changed here on the daily chart. Once price breaks below a level such as this one here, the idea is that price might come back to test this level again and then bounce off this level and continue in the original direction of the trend, which is in our case now a downtrend. So you might be tempted to say, all right, wait, let's just zoom in a little bit more. You might be tempted to think that price has pulled back and we are now very far away from our moving averages, and you would want to speculate now on a potential pullback to those levels. Would this be a good trading opportunity to trade this pullback? First thing that we need to understand is here, this would be a counter trend trade, because now the trend is here to the downside. First thing. Second thing, it's not really a strong downtrend here yet because our moving averages are not yet in place. They are not showing us this fanning pattern as we had it here, the 10 above the 20, above the 50, and then those occasional pullbacks. All this is missing here. So I want you guys to understand that if we think we can now jump in here and look for a trading opportunity to trade and test this right back here to this level, while I still feel that this is a fair and valid assumption that this might happen, I just don't have enough supporting factors and decisions right now. So first takeaway here is the DAX is giving me more directed price action than the S&P 500. I'd much rather trade the DAX right now than the S&P 500. Price has now pulled back, or price has made a new lower low, and we might think that we might be seeing a pullback, but it might be too early to decide this. What I would like to see now for a potential pullback here is, for example, a trading opportunity on lower time frames. Let's forget about those lower time frames for a moment and have a look at some Nadex contracts here. We do have now Tuesday, and so the idea might be, all right, we want to trade a pullback to this level, and we're looking here at the Germany 30, and let's have a look at the weekly options. Those weekly options do expire in 3 days, and you might be tempted to say, I still feel that we get this pullback to this level. How could this pullback be tradable? I do not suggest that this is a good trade, but just if that's your game, if that's your decision, how would I now apply that potential trading opportunity here with binaries? Well, that's a daily chart, which means I want to see. I think it takes some time for price to pull back. First decision call or judgment call that I do have to make is, do I think that 3 days remaining is enough for this pullback to occur? If I think that that's the case, the next question would be, all right, what could be a suitable strike price to go for? That level to be retested here is 12,900 something. I have a strike price here of 12,925 or 12,875. If I go, for example, for this contract here, which is the 12,875, I can buy this contract now for $19.75. My maximum loss that I could take, or yeah, really the worst thing that can happen, no doubts, no hoping, no praying, that's the worst thing that can happen, is I can lose all my $19.75 per contract. I know my risk up front. However, my maximum profit, if that contract, if the underlying market pushes above that strike price at expiry, my maximum profit on that contract would be $80.25. Now, is this a setup where I would think that I want to wait for this contract to expire? No. The nice thing about those contracts here is that you can actually manage your position. It's not fire and forget. You can manage your position. So just for the sake of demonstration, guys, I'm placing this trade now. First thing, it's just a demo account, and I do not suggest that you take that trade. It's just for educational purpose. So let's be absolutely sure that we're on the same page here. First thing, how would I apply proper risk management? Well, my account here is $24,000, and 55 cents. I want to risk about 1% of my account on any one given trade. So the thing that I have to do now is I would have to increase, let's go for the current price, I would have to increase my position size here until the number that I see here represents 1% of my $24,000, which should be $240. So I can trade now 12 contracts, and those 12 contracts, if the trade goes against me completely, I would be losing just 1% of my account. This is what many successful traders do with their own trading. They, if you think about it, if you just risk 1% of your account every single time, you will have a very hard time, and it will take very long for you to actually blow up your trading account. However, if you risked 50% of your account on one trade, 2 bad trades and you're gone. You risk 10% of your account, 10 bad trades and you're gone. And trading is not about having only winning trades. Trading is all about probabilities. And once you have understood that it's about probabilities, you will realize that having 10 losing trades in a row, while not being nice, is something that is absolutely possible without having any significance at all. It doesn't tell you a thing about your trading strategy. It doesn't necessarily tell you a thing about your capacity and your knowledge as a trader. It's just the laws of statistics. And for that reason, we must stay small. We must make sure that we are able to survive those losing streaks, and they will be there, and they don't have any message, they don't have any meaning. It's just the same thing. You're sitting at the roulette wheel and you have 10 times red coming up. This does not influence in any specific way the probability that on the next spin black should be coming up. Completely independent events. You have to understand that. That's really, really crucial. And for that reason, we must stay small. Risking about 1% is going in that direction. So I would be interested here in potentially trading this setup here. The market has started to move higher. I'm scaling back now to just 11 contracts, and I just can place this order. Once again, it's just for educational purposes. All right. So that order is live and probably has been executed. My internet has been somewhat slow here today, guys. So I'm sorry about that it's not showing up right now. Just a second. Let me just quickly refresh that browser session here. All right, so what was my speculation? Let's draw it in. My speculation, while that page reloads, is that I'm speculating that we will see a pullback here to round about that price level here. Something like that. And I expect it to happen until here. Could happen, doesn't have to happen. We will have to wait and see. Just a second, guys. All right. Here we are again. Sorry for that short break and inconvenience. All right, so my position is on. I have an open position with 11 contracts. That's what I went for. Now, how much am I risking per trade? Well, the 21 contracts here, or the 21 that I had to pay for those contracts, for each contract. How could this now be manageable and tradable? Well, first thing is, if I risked 21, I don't have to wait until expiry. So I could now say that I want to sell 6 out of those 11 contracts. Once price hits, I'm risking 21. I want to at least make a 1-to-1 reward to risk ratio. So I could be closing 6 of those contracts now if we were trading at a price of 42. Now you can see my maximum profit here on that transaction pretty much locks in that profit that I would still have as a risk on those other contracts. So putting that order in here, you can see I now have a limit order sitting here. I want to sell 6 of my contracts for a price of 42. So if price happens to trade towards this 42, but the nice thing is price will not have to actually hit this price level here, because 42 should be priced just pulling back towards the strike price. Remember, if price of the underlying market is trading at the strike price of an option, that option should have a price of roughly 50, something like that. Quick rule of thumb. And once we know that if price is pulling back now, the price of 42 in the neighborhood of that strike price should be reasonable. So that's the first part of how that could be managed. Next thing is, all right, we don't have to keep everything. We still have 5 contracts on here. We could also go now for, all right, I'm now going for a 2-to-1. I have 5 more contracts remaining, and I could be going here for a 3 size trade. 42 plus 21 is 63. So I would be closing out another 3 contracts if price happened to trade up to 63. And we could be going with the remaining 2 contracts now with the idea, yes, price will maybe actually settle above that strike price. However, I've continually now scaled out of my position, which now should help me to manage my risk, to lock in any early profits, and to move this trade as quickly as possible from a potentially losing trade to a break-even trade. Because if I take off half my position, the 1-to-1 profit target, that trade has now become pretty much unlosable. I should not be able to lose any more money once that first profit target has been hit at 1-to-1. I feel that this is a really interesting and important addition here. You don't have to wait until price expires or until that option contract expires. You can actually manage that position, and this is the way how I would do it. However, this pullback here, it's not really that perfect pullback, because what would I like to see for this pullback to be actually good? I want to see on those lower time frames an uptrend. I would like to see that this pullback that we already saw on the daily chart actually was sustainable. But however, here on the 2-hour and on the 1-hour chart, we saw this move lower. We saw pullback towards the moving average sell zone, bearish candle, small bearish candle setting up here, and trend continuation. That would have been a very nice trading opportunity here for the lower time frames. And we can see here that this setup here is, we will see that this setup here, trend continuation, that is what we're looking for. The daily chart is giving me the downtrend. The hourly chart is telling me the same thing. The 2-hour chart is telling me the same thing, and so on. All right, so it's maybe the 15-hour chart. The 15-hour chart can't give me. We have seen a small uptrend here, however, ever so slowly. Please compare the speed of the move of those markets. Price is pushing lower here very fast. Price very slowly retraces here, and sure enough, price continues now to retest those old lower lows again. So this is why I'm currently not seeing anything here that suggests that this pullback trade actually is going on and is tradable here. All right, so however, let's compare the US 500 with the Germany 30. Better market, better chart structure, and actually, no, I don't want to trade this pullback. I see too few reasons to actually trade in that direction. Would be a very convincing setup, but it's just missing too much. Actually, what we are looking for here are those setups here, like the pullback here, or on the 1-hour chart, or probably also on the 30-minute chart. Bearish candle setting up here, and enough trend continuation. So that's and I'm talking again way too much. Guys, if that's okay with you, I will be going a little bit over time. Let's have a look at WTI. Let's have a look at crude oil. All right, so here's crude oil. Crude oil has been in that trading range down here pretty much forever. Then price pushed higher, came back, created this level here with the first touches, second touch, third touch, fourth touch, and guess what? When OPEC suddenly decided to increase production volumes, sure enough, price started to fall apart. And where did price fall apart to? Exactly this level. People always tell me those lines are just stupid horizontal lines. Those are leading indicators. Those are from those points onward here. You were able to say, all right, if price is approaching this level, people have reacted to that price level in the past. They will probably do so again. And guess what happens here? People are reacting to this price level. So that's the nice thing that I wanted to share with you guys here. Definitely new lower low here. Obviously, the 10 and 20 have already crossed. 50 is not yet into place. But when we see momentum like that in the market, going to lower time frames, yeah, 4-hour chart, beautiful, strong move to the downside. Not really tradable because the move was so fast. We never got those pullbacks. So nothing for us to do, right? No, that's wrong. If the 4-hour chart isn't giving me the setup that I'm looking for, maybe the 2-hour chart is. Same thing here, the market moved too fast. So let's drop it to a 1-hour chart. And here you can see the price is already trading closer for pretty much amount of time, closer to that moving average sell zone. Let's have a look at the 30-minute chart, where again, closer, trading opportunity, and let's have a look at the 15-minute chart. Same market. And here you can see the price pulled back there quite frequently and gave us potential trading opportunities there. If you see the momentum, if you see the price is just not behaving accordingly on the higher time frames, start to drop down with your time frames. And guys, if we go now to a 1-minute chart, you will start to see that those pullbacks probably in the past have been way too deep. And if those pullbacks have been way too deep and have not been giving us the structure that we're looking for, because they have been too deep, then we just move on to the next higher time frame, for example, here a 5-minute chart, and see what's going on there. And guys, just looking at this here, you see in a 5-minute chart, those pullbacks here, trading opportunity, and again, and again, and again, and again, and again. You could have traded here 6-7 times, nice setups, trend continuation all the time. Play around with those time frames. Look for something that catches your eye on the daily chart, because once again, that daily chart is what gives you context. And once you have that context, once you see what's going on there, then look for those trading opportunities on those lower time frames. And don't hush away those horizontal lines of support resistance. They're so easy to identify, they're so easy to draw, and they are so powerful when it comes to actually predicting potential price action for the future. So let's have a quick final look here also at the euro against the Japanese yen. Why euro against the Japanese yen? Let's zoom out here. That market was pretty much a long time here also in a range-bound phase. Let's draw it in. Let's go for this horizontal line. And let's just, how did I find this line? Well, I see the price had a closing counter here. Price touched there, price touched here. So this level of 129.25, something like this. Obviously, the market reacted to this level in the past. Same thing happened here. Yeah. And we can tweak this here a little bit, and we can go for another level roundabout here. So price has broken out of those levels. Price is now sitting here. And we are looking now here, how is this tradable? Well, we have broken out. We have now a lot of momentum in this market. It's same idea here as with the German DAX. We could see a pullback here towards our moving average sell zone just below this level. That might present a trading opportunity. Or we could be more aggressive and think, all right, we can trade this pullback here. Why didn't we want to trade that pullback on the DAX? Because those lower time frames were just giving me direction, no clue that we actually started to see at least a little bit of bullish momentum on those lower time frames. So maybe that's different here. The 4-hour chart, beautiful downtrend. This is going down. The 2-hour chart, beautiful downtrend. The market is going down. Let's have a look here at the 1-hour chart. Same story. And guys, you see those pullbacks here to a moving average sell zone, and then trend continuation. So do I suggest that it makes sense now to trade this pullback here? Absolutely not. Same reason applies, or same logic applies as we had it with the DAX. I just don't see anything convincing that this pullback actually is happening right now and that it is strong. I would at least like to see an uptrend on a 5-minute chart, 15-minute chart, and 30-minute chart in order to consider trading that 5-minute chart as a counter trend trade for the daily. I hope that makes sense. We got a question here. I'm just starting. I know nothing about options. Where do you recommend I start? My suggestion would be to have a look at the webinars here, obviously, and also at the recording of those webinars, and just get a good feeling here. The traditional literature is all going towards puts and calls and the traditional option strategies, butterflies, iron condors, and so on. Binaries behave differently, and for that reason, I feel that you would just get too much information too quickly if you were going towards that direction. My suggestion would be to get a good understanding, try to figure out binaries and try to figure out spreads. Some people say spreads are so easy, I didn't get binaries. Other people, it's just the other way around. Focus on one of those strategies and not one of those instruments. Kirby, thank you very much for the feedback. Thank you very much. I'll do my best. And once you understand the instrument, the next step for me would be to try to understand reading price action, figuring out what the market is telling me. People tell me those contracts, those binary options, they're just gambling. No, they are absolutely not. Because you want to find a setup that you trade. This is why we look at those charts. We want to stack the odds in our favor. We want to identify many things that suggest that this market might be going in one direction or the other. We will never know for sure, but by stacking the odds, finding little hints, little suggestions, the idea is that we can be right more often than not. And this is enough to make money together with proper risk management. With the trades that I've put on here, just educational trades, you see that I'm looking at a risk, a well-defined risk, and even if the market is moving a little bit for me, I've already taken all my risk off the table, and I now have still the opportunity to make more. This is not gambling. This is having a plan, and this is following through. This is not throwing a dice. This is throwing a dice which you have cut in a way that it works more often for you than for the other guy, and you want to throw that dice as often as you can. And you want to gamble and set the same amount at risk all the time. This is how we make money with trading. We want to win more often than we lose, and the winning trades should be larger. And both binaries and spreads are brilliant instruments to help us achieve that. All right, guys. So I hope that answered that question. Let's just quickly jump back here. We're already a little bit over the line and over time. So guys, thank you very much for tuning in. I hope you enjoyed today's session and you learned a little bit of something new. And just as always, any feedback that you have for us is really appreciated. If you haven't signed up for a Nadex account, please consider using a demo account at first. Play around, get to understand those tools, get to understand the platform, the exchange, and just practice. This will never prepare you for the emotional stress and trading psychology that goes with trading real money. But you will have the practicals down. You will know, just like the routine drill with the military. You know what to do. And now it's giving you content. Now it's giving you context. That's the next thing. And this is only something in the long run which you can do on a real account. But please, by all means, go for those demo accounts. They are available for an unlimited period of time. So no 14 periods, 14 days, and that's done. Just sign up. Nothing to lose there. All right, guys. So thank you very much, Jason. Thank you very much. I'll do my very best. And yeah, to all of you guys, have a very great rest of the trading week. and catch you next time. Thanks again. Take care and bye-bye.